Evening and welcome to the Daily Credit Report exclusively here in the Free Credit Repair Advice Group. My name is Jeremy Deysach, and I am a FICO certified and American Institute of Banking certified licensed and bonded credit coach with Credilife Financial Wellness. And this is the Daily Credit Report. We do this every evening. Myself, I'm on Wednesday nights. And what we do is we talk a little bit about different credit topics. We go through, talk about topics that have been in the group lately, topics that have been hot button items for people, and we'll go through it and hit a variety of different topics. So what I'm going to do is I'm going to let the room fill up a little bit here, but tonight's topic is having more money because you have good credit. Okay, actually having more money, be it making more, be it saving more, however you want to look at it, but actually having more real money because you've got good credit. So we're going to let, like I said, we're going to let the room fill up just a hair. In the meantime, if you do want to hire a professional, if you'd like to have me as your credit coach, you can do so by clicking on the link that is in the description here, and I've also dropped it in the comments section. You click on that link and you will be able to pick a day, an evening, a weekend directly out of my calendar and a time that works for you for an initial consultation. It's to see if you're a fit with that program. During the consult, we talk about your goals, talk about your credit, put together a plan, a set of steps. So if you want to hire a professional, I'd love to work with you. But I want to first and foremost get into tonight's topic. Okay, so tonight's topic, quite simply put, is how to have more money because you've got good credit. Now I'm going to open this up. Hey, Joseph, good to see you. I'm going to open this up to a Q&A at the end too. So if you have any other questions tonight, they can be about our topic or they can just be about credit in general. You'll have the opportunity to ask and get a professional answer on it. So credit and money, all right? We know that, and you know that, credit does not operate in a vacuum. Okay, credit doesn't operate in a vacuum. There is a lot to take into account. There's your debt load. There's if you have collections. There is your income. There is your monthly spending. There are the rates that you pay for a mortgage or what you pay for your apartment. The rates, the interest rates you pay for a car. The rates you pay for your insurance for your vehicle. There are differences in the rates you pay on credit cards, all kinds of loans, student lending, and these things are all interspliced with your credit. So tonight's topic, I want to show you how important it is to have good credit. Now, what made me think of this is there were a number of people this week who had asked the questions. We had some hot topics this week. One was somebody who wanted to put down $60,000 on a house so that they'd qualify at a 520 FICO score. They'd get into the house at a 520 FICO score, and they were asking, do you think this is a good idea? Do you think this is a good idea? I got 60 grand to put into this house for a down payment. It'll get me in. I'll have the house right away. Is this a good idea? We had another person who had all the money to purchase a vehicle, okay? And they went in to buy a brand new vehicle in cash. Well, a check. And the dealer told them, look, there are some other ways if you actually finance this that it can be better for you. So I want to talk to you guys about this tonight and show you some real numbers, some actual accurate numbers. Hey, Marissa. Hey, JR, how you doing? Some actual numbers that will potentially astonish you when it comes to the difference when you've got good credit to bad credit when it comes time to buy a house, to buy a car, to get your insurance and things like that, okay? So we're going to start out with the number one goal of people in the Free Credit Repair Advice Group. People come into our FCA group and literally 9 out of 10 times we've gone through and pulled this. We've looked at Credilife over the thousands and thousands and thousands and thousands of clients we've had. 90% of them, 90% of you Your goal is to be able to qualify for and purchase a home. Could be your first home, could be your move up, could be, a situation where you've had one before and maybe you went through the mortgage downturn and you had to give it back to the bank and now it's time to get back in the saddle. Whatever it is, 90%, plus of you, I would say, are looking to purchase a home. Okay, so we're going to take the example of the woman who posted in the group and said, look, I can put $60,000 down on this house. I've got a 520 credit score, and I can qualify in for this thing because it's a big down payment. Okay, it's a big down payment. My advice to this person was repair your credit first. Either do it yourself or hire a professional. I don't care which you do. Okay, you're the arbiter of how much time you've got. You're the best judge of your capacity, of what you know and what you want to do, or what you'd rather have someone else do because you're too busy with life. And it's not to push that. It's not to push a product or a service onto a person. My advice was simply fix your credit first and get a better mortgage. Okay, so I took and ran some real life actual numbers on this. And I'm doing this off of a starter home level. Okay, I'm talking about, we're going to use for an example of a home purchase. A home, by the way, since I have you guys watching, it looks like I got a few of you watching. Do me a favor, give me some thumbs ups. Thumbs up in the group, thumbs up in the chat here. If buying a home is your goal, if purchasing a home is your goal, and you drop some ones, drop some number ones, just one. You drop some ones, let me know that that's your number one goal. Go ahead and drop that in chat so that I know that this is something that is relevant to you and that you're actually interested in. So give me some thumbs up if you are, give me some ones in the chat, okay? I'm good, awesome, got some thumbs going, got some thumbs up, that's beautiful. Awesome. Hey, Christopher, good to see you. One of our other credit coaches has joined us. Okay, perfect. Thumbs up, guys. I love it. Okay, so we know that goals for you folks and me and everybody, goals are to have your own home, to stop paying your landlord's mortgage, right? To stop paying rent, stop throwing money down the hole. Maybe you want to get your kids a backyard to play in. You're sick of sending them out into the parking lot in your apartment complex to play. Maybe you live in a bad part of town. You want to escape that. Maybe you want to escape generational poverty and be the first person in your family to ever own a home. I don't care what your situation is. We all have that same goal of home ownership, okay? I'll tell you what, it is really cool letting your kids have a bedroom and they know that that's their room. And that's going to be their room a year from now, or 2 years from now, or 3 years from now, because the lease won't end. That's really an important thing for a kid to be able to put down those roots and to be able to have that security. So let's take that as our goal, okay? We're going to use an ultimate starter home type of price. I'm going on the cheap, because if you buy more than this house, if your goal is a house that costs more than I'm dealing with, your savings will be exponentially greater. The money you have in your pocket, awesome, in a car first, will be, and a Jeep, awesome, will be exponentially greater. All right, so we take a house. We're going to use a house valued at $103,000. $103,000. Now you damn near can't find a house for only $103,000 anywhere. But I'm doing this because we're at some good round numbers. You'll see in just a second. Let's say we want to do an FHA loan. FHA loan is literally the most common first-time home buyer loan in the country. FHA has got some features. They only require a 3% down payment, which in our example, we're just going to call the $3,000 our down payment, okay? And if you're in Right Way to Real Estate, or if you are, that program, or if you're in some of these other ones with down payment assistance, you may not have to come to the table with that. But right now we're going to say, okay, you've put $3,000 in. We're talking about somebody who maybe right now wants to buy at the lowest possible FHA with only 3% down. The lowest possible score right now for an FHA loan, where you only have to put the $3,000 down on that $103,000 house, would be a 580 FICO score. Okay, so we're assuming we've gotten to a 580 FICO score. And you're like, you're talking to a realtor, you're talking to a mortgage person. They're like, yeah, we can get you in the house. All you need to do is hit that 580. We'll get you right in. And they're pushing you. They're like, oh, you're ready to buy. Let's pull credit. Let's get you pre-approved. Let's get this and stuff. And a lot of you guys may have met mortgage officers or realtors who, we'll get you to 580. We'll get you in the house. We'll get you to 580. We'll get you in the house. Let me tell you something. Just because you can does not necessarily mean you should. Okay, these people are chasing a commission. If they actually care about you, they're going to push you until you get to about a 640 and better for FHA. In a perfect world, you want to be 680 and up, okay? And that's not that far of a difference from 580 to 680. If you've looked around in the free credit repair advice group, you've seen that people with our help at Credilife or people with the help in the group doing it themselves have no problem getting there. It's nothing for them to get there, right? So the difference, there's going to be a different interest rate, okay? If you're a 580 credit score or a 680 credit score, at 580, you're a lot riskier to lend money to. You've got crappy credit. You have not shown a good history of a willingness and ability to repay in a timely fashion. That's why you're 580, okay? If you've got a 680, you've done a lot better. You're a lower risk. It's more likely that if they lend you money, they'll get it back because you've shown a history and a willingness to repay on money you've borrowed, okay? So because you're riskier at a 580, your interest rate will be higher because they have to make the money to cover for some people who are never going to pay and they're going to lose money on. So they have to make the money on you to be at that same level. If you're at a 680, your nice score, your interest rate will be far lower. So we're talking about this $103,000 house on an FHA loan, okay? We're putting $3,000 down. So we have a $100,000, we'll say roughly, a $100,000 mortgage on the house. You can either do that at the 580 where that realtor and that mortgage lender are pushing you and just because you can doesn't mean you should, or you can wait and get to that 680. Well, at a 580 right now, your interest rate would be 6.92%. 6.92% interest on a 580. If you waited until you got to a 680 or better, you can get today a 3.92% interest rate. That's literally a 3% difference in interest rate. Doesn't sound like a lot. Doesn't sound like a ton until you break it down into numbers. So we took an FHA loan, a 30-year term, $100,000 loan amount, okay? Those are the same. Now we're going to take a look at what it is if you've got a 580 or what it is if you've got a 680. We're going to start with the 680. Okay, let's say you take Jeremy's advice. Jeremy's a FICO certified credit coach. He's a former CEO of a mortgage corporation. He knows a little bit about what he's talking about here. And he talks in the third person, apparently. So you're going to take my advice. You get up to that 680 before you do your FHA loan, right? You put your 3% down. It's going to be a $100,000 loan. You get an interest rate of 3.92%. On a 30-year loan, $100,000 at 3.92%, you have a monthly principal and interest. So the cost for the loan, you have a monthly payment of $473. Now, some of you are going, oh my God, that's a lot cheaper than rent. Well, guess what? You're right, okay? $473 on that FHA loan with a 680 per month, okay? Now, over 30 years, 360 payments, you're going to pay a total for that $100,000 of $170,280, assuming you never sell the house or refi or anything like that, okay? You will also now, since it's an FHA loan has something called PMI. It's mortgage insurance. It's something that's required to be on the loan. The rate of PMI on that 680 person, you're up to a 680, the rate is 0.5. What that translates into is your PMI will be $42 per month, okay? So now you got a mortgage payment of $473, you've got a monthly mortgage insurance payment of $42. So you got what? You got a $500 and like $15 mortgage payment for the loan and the PMI. That's not bad. Now we're gonna say, well, what if we go ahead and we do this at that 580? Okay, 580, $100,000. Okay, $100,000 loan. Same thing. FHA, 3% down. That's all the same. 30-year loan. That's all the same. It's FHA, so it'll have mortgage insurance. So that object is the same, but you're going to notice a difference in a second. At 6.92%, a $100,000 loan is $660 per month. Okay, $660 a month versus $473. That is almost $200 more per month because you did it at 580 instead of waiting till you were 680. Remember, just because you can doesn't mean you should. So already your payment's $200 higher. But we have mortgage insurance to consider. Because it's an FHA loan, you have mortgage insurance. The mortgage insurance rate at that 580 is much higher. Okay, it's 3.26 right now. That brings your monthly PMI or mortgage insurance payment from $42, it makes it $146 more. It makes it $188. So by waiting, you're $188 versus $42. So literally, your payment has gone up. What if you got 470? So we were at like $515. If you do it at 580, you listen to the realtor, you listen to the mortgage lender who's pushing you. If you do this at 580, you're shelling out monthly $660 for that mortgage, another $188 for the PMI. So that's $760. That's $848 versus $515. Okay, so over the life of the loan, if you wait till you're at 680 score and you get that loan, over the life of the loan, you pay $170,000, like I mentioned, and $280 on that good, once you're up to a 680. Over the life of the loan, if you do it at 580, you pay $237,600. On the loan, waiting a few months until you improve your credit and get to a 680. On the loan by itself, that same FHA loan, by waiting those months, you stand to save $67,320. That's real freaking money. By the way, when you're talking about credit repair, that's $299 down, $135 a month. To save you $67,000 starts to make sense. But you can still do this yourself, okay? That's $67,320. But we forgot about the mortgage insurance, didn't we? The mortgage insurance difference over that 30-year term, because FHA requires there to be mortgage insurance on the loan for the life of an FHA loan. The savings by doing it at a 680 score versus a 580 score and doing it right away, because we're instant gratification in America and we all want to be in our house right now. We want it all right now. The difference over that 30 years on the PMI, the mortgage insurance, this is an insurance policy that only protects the bank if you screw the pooch. So you've lost the house if you did that. You were foreclosed on. You lost the house. You have nothing to show for it, and they got their money out of it, and you paid for that. The savings on the PMI on 30 years is $52,560. You put those two together, just because you waited a few months or you hired a credit repair company like Credilife, you will save yourself a total of, well, let's see. Let me bust up a calculator really fast. $52,560 plus $67,320. Okay. So we were talking about the difference between a 580 credit score and a 680 credit score on a $100,000 only loan. The difference between doing it at 580 and doing it at 680 is real money in your pocket. It's a savings of $119,880. Why? Because you took Jeremy's advice. Let that sink in. This is real. You will have more money. You will have $119,000, 880. So almost $120,000 that you have more to buy your children. I don't know, college. That will pay for your kids' college. To buy, I don't know what you want a lower grade Ferrari. It'll pay for it. How about some retirement? How about nice things for the home? How about financial security? How about being able to pay the mortgage off sooner? How about a future? How about a better life for your family because you've got more money, because you've got better credit? Think about that. Does that make sense to you? By the way, you still got the house. You still got the house. I want to scroll down through some of these comments. Yeah, Money Pit. Drew, welcome. Okay, just scrolling down to make sure we haven't. Okay, cool. I want you guys to throw me some thumbs up. I want you guys to throw me some number ones in the chat so I know that this is making sense to you. Does this make sense to you? Do you have any questions on what I just said? Do you have any question why, when people say, I can't afford to fix my credit? Bullshit. You can't afford not to. Okay? You cannot afford an extra $120,000. You can't. You can't. Your children can't afford you pissing away 120,000 extra dollars because you couldn't wait or you couldn't do it right. You listen to that realtor, let's get you in now. I got a special program. I got a mortgage lender. The mortgage, let's get in now. I got this FHA program, 580, right? That's just the house. Now, some of you said you want a car. Fantastic. Let's talk about vehicles for a second. Let's talk about cars. Let's talk about how you can have more money with better credit, okay? Let's go into the cars. I happen to have already laid out for me, which makes life super easy. I happen to have a little side-by-side comparison I like to use on vehicles, okay? Let me open that for myself. Okay, we're gonna use the same 580 and 680. 580, that's bad credit. It's poor credit. So if you've got bad credit or no credit, but you wanna get a car, you're gonna have a different interest rate, a bad one, like credit card level potentially. If you've got good credit, you're going to get a good interest rate. So we're going to use an example. We're going to use an example of a car with a car loan of $20,000, a car loan of 20 grand. That's a nice used car or it's a cheap new car. $20,000. $20,000, we're going to do a 5-year, a 60-month term loan on the car. 60 months. 5 years, $20,000 loan. Okay. If you have got good credit, 680 and up, you'll get an interest rate of, by the way, this is a crappy interest rate I'm about to quote you. I just bought my new Edge that I got out there, the titanium, the Ford Edge, I think with all the whistles and freaking bells, a brand new one. I just bought it and got 1.7%. I have the money I was going to put into it in a savings account making 2.6%. I'm making money on not having spent it on my car. And I'm actually having the payments go out. So it's generating money to help pay off the car. My money is actually helping pay for my car for me. So good credit, 20,000 bucks, 5-year loan. We're going to say 6% interest rate. And at a 680, if you can't get better than 6, then you need someone to help you shop. Okay. So 6%, 5 years, $20,000 loan. Your monthly payment is going to be $387 on your new car. Okay. The total interest you're going to pay over the life of that sucker, your interest is going to be $3,199. That's how much interest you'll pay. So you'll pay a total of $23,199, $23,199 for the car with good credit because you waited. But no, we want it now. We're Americans, damn it. I demand it. I earn it. I'm entitled to it. I deserve it. I'm going to get it right now at the 580. I'm going to get it. I really need a new car. I really do. I'm not going to wait. I'm not going to listen to Jeremy. I'm not going to listen to a professional. Okay, fine. Let's just buy the car. 580, you can expect a rate of upwards of 26%. That's realistic. 580 and under, it's very realistic to get 26% financing, particularly if you've ever had a repossession, lates on an automobile, lates on an installment loan, bankruptcies, foreclosures, all the big nasties. If you got any of that in your past, you can pretty much expect credit card style interest rate. So we're going to assume 26%. A monthly payment on that $20,000 loan, 5 years, at 26% is $599 a month. $599. So you'll pay a total interest at 26%, a total interest of $15,929, meaning you're paying a total of $35,929. $35,929 for the same car that if you wait until you have a 680, that you're only going to pay $23,000 for. That's a difference of $12,730. A difference of $12,730. That's real money in your pocket. Let's add that to the $120,000 that we saved on the house because we waited and we were smart. So with just the first car and just our first home, because we waited, because you listened to a FICO certified credit professional, you're going to save $132,730. That's real money in your pocket. That's real money in your budget. That's real money for your family. It's real money for your children. It is the swing set in the sandbox in their backyard when they're kids. You're going to give them a backyard to grow up in. Maybe the new fence around there, the safety, the security. They'll have their own home, their own room, something they can count on, a place that's theirs for once. That is putting money away for their college. If you put that money away now while they're 5, 6, 7, 8, 9 years old, by the time they go to college, if it's not doubled, you did it wrong. That will pay for their entire university, their entire college. And I'm not talking about community college at $5,000 a year. I'm talking about big time college. So your children, by the way, will then come out without having to take on all that student loan debt that all these people are upset and worried about. So you could be theoretically the first person in your family generationally to ever own a home. You may be the first person to ever send your kid to college. You may very well be the first person to ever write a check so they could go. Now, where's that going to leave your kid when they graduate college, when they have a job? It's going to be better and better. You can end all kinds of bad things, generational poverty, things like that. But ultimately, what this is about is money. It's about money in your pocket. It's about having more money because you did it smart. Having more money because you did it right. You listened. You took the effort. You were patient. And I'm not talking about waiting a year. I'm not even talking about waiting. This may happen in a couple months for you. Okay? I'm talking about taking real action and either hiring a professional to help you out or working your butt off in that free credit repair advice group using the tools we give you. And we give you, Credilife, we give you more free tools than the vast majority of credit professional companies charge you for. You should see what we actually charge you for. We give away more than most have as their whole program. That's our gift to you because we feel that you should have access to these tools. You were never taught about this in school. Your parents may not have taught you. They didn't know. Okay. So we've got our car. We've got our house. We have $132,730 in our income, in our nest egg, in our family. Okay. Now, there are other things. Credit card interest. We could go into credit card interest, but the better score you've got, the more you save, the more money is in your pocket. Auto insurance. Did you know that they use your credit score to determine how much you're going to pay for automotive insurance? So you could have the same set of wheels, You could live in the same zip code. You could be the same age, same gender, same, I don't know, whatever they use, nationality, race, height. I don't know what they use for these things. You could have the same driving record as the person next to you. And just because you have different scores, you're paying different amounts. So you get that score up to the 680 and you're getting the cheap insurance. And that's more money for your family. Does this make sense to you? Does this all make sense to you? Do you see why I say when people go, I can't, it's not literally, it is not a sales pitch. It's a freaking reality, okay, guys? When you say, I can't afford to fix my credit, you can't afford not to. You can't. You can't afford not to. You also can't afford to listen to some of the nonsense and misinformation that's out there. You guys, we have professionals running this group for a reason. Listen to them. Follow what we say. We're not saying it because we think we're, well, I'm pretty awesome, but we're not saying it because we think we're awesome. We're saying it because we have to fight through the misinformation. We've got 62,000 plus people that we're responsible for, and everyone they spread it on to. And we can spread essentially the gospel of the reality of how credit works. We can fix a lot, man. We can fix a lot of problems. We can change a lot of lives. You can't afford not to hire someone. You can't afford not to do it yourself. No matter what, you can't afford not to fix your credit. Does this make sense to you guys? Give me some thumbs up if it makes sense. I want some feedback. Give me some number ones in the chat if this makes sense. If you think it's nonsense, give me angry faces. If you think I'm full of it, give me angry faces. But if you think this is reality, because newsflash it is, if you think this is good, if this is something you can apply to your life, now that you understand this, give me a thumbs up. Give me some ones in chat, okay? I'm going to open this up to some questions. I'm just going to scroll back up. Drew, awesome to see you. Chris, good to have you here. JR, does that make sense? Now, Linda, your Rubicon, does it make sense to wait till you're in, your score is right where it makes sense to do that? Remember, same car, almost twice as much. It's amazing. All right, what else we have? Megan, awesome to see you. Thanks for learning. Thanks for being here. You guys also invite people to the group. If you think there are people who could stand to have a credit education, people that you care about maybe, take anyone in your friends list that you actually care about, invite them to the group. I promise you, they don't actually know all the real things to credit. Everyone can benefit. Joseph says, $1,750 a year extra PMI. Yep. Absolutely, car insurance. I'll pay off your car insurance. Linda, welcome for your first video. We have got more videos in the video section of the group. Also, we host a channel on YouTube called Credit TV, CREDI TV. My videos are on there. Other coaches' videos are on there. Our Credit Rockstars podcast is on there as well. There isn't, Joseph. We're the only one anything like this. Oh, hey, if you're going to have an obsession, Megan, an obsession that really, really, really changes your life in such a good way, it's a great obsession to have. Awesome. Thank you, Megan, for how do you get us to fix a credit? If you would like to have me as your coach, not even just get the luck of the draw, but specifically me, Bell, I'm going to put my link, boom, right down there in the chat. You can go ahead and you can click on that and you can pick, you actually get to access my calendar directly and pick a day or an evening. I keep those open, mornings open. I keep some weekend mornings on Saturdays open. So pick a time, day, evening, weekend that works for you. We'll do your initial consultation. There's no cost for it because we're trying to see if you're a fit for the program, okay? And I'm the first. I had one today. One of the gals in the group will tell you, we got 5 minutes into it. I said, you do not need our full program. And I talked her through what to do. She's welcome to, I said, you're welcome to hire me if you'd like to help you with it and do it for you, but here's what you have to do. Because I couldn't in good conscience, for the just couple things that were needed, I couldn't take someone's money for that. So Belle, if you want us to help fix your credit, just click on the link and we'll set up that that enrollment kind of analysis and we'll figure that out. Linda says, Ferrari can go fast, Jeep can go anywhere. Absolutely. They should make a Ferrari Jeep. You can go anywhere fast. JC, it's wonderful to see you here. Stephanie Sutton, great to see you. Hey, Kevin, Welcome. Kevin, by the way, won our swag contest. Kevin's a client of mine here at Credilife. He won the swag contest. So the box with the is on its way, by the way. Molly's sending it out to you. The box with the it's got the hat, it's got the polo shirts, it's got all the cool stuff. That's neat. Welcome. Hey, JR. Yeah, a couple nice Jeeps for you. Absolutely. Zakia, great to see you. Randy, not all states use credit in auto insurance, and that's true. They don't. But would you rather have it, not need it, or need it, not have it? You know, what if you move states? What if you transfer? What if? And even if they don't for the auto insurance, it's still being used for your mortgage, still being used for your PMI, still being used for your automotive interest rate. It's still being used for your credit cards. It's still being used for installment loans. It's still being used for retail loans. It's being used for damn near everything in your life. That's a good point, Randy. Thank you for bringing it up. Megan, yep, watch the replay. You bet. Yeah, I do replays, and I like to do a watch party afterwards, after tonight. So I'll do that. I'll hook that up. So if there's anything you missed, I'll just like rerun it in the group. Absolutely, yeah. Good point for the states who do. Yeah, it's Randy again. It's totally. It's. I want to future-proof everyone, because what if I think Georgia might be one of the ones that doesn't use it. What if Georgia says, yeah, okay, it's okay to do now? All of a sudden, bam, your insurance doubles. It could be bad. I mean, and it happens like that. That's what happened in Wisconsin when Wisconsin brought it into effect. There we go. Megan, oh hey, thanks for tagging somebody in. Linda, hell yeah. Joseph says invite them even if you don't care about them. Yeah, do a good deed for someone even if you don't care about them. Awesome. Alicia says, you and your group are so amazing. I've been slowly working on my credit for the past 3 years, following your group in the videos. I started at 480 and now at 680. Boom! Sorry to yell in your ears, guys, but that's awesome. You are where I'm talking about. It's time to grab your goals. It's time to grab that brass ring. They need people like you teach this in high school. I'll tell you what, I've got a class called Financial Foundations and Credit. It's actually available on the YouTube channel on Credit TV, CREDI TV on YouTube. You can see the class I do for Minneapolis public school systems for the community ed. I've got a class that I designed that I taught with the CEO of Credilife also, but it was sort of my baby. But yeah, they don't teach. Ironically, I had a home economics in school, and I learned I could sew. I'm actually shockingly good at it. I learned to cook. I mean, I'm a foodie. Look at me. It's if that wasn't obvious, but I didn't actually learn any home economics. Didn't learn about checkbook balancing. Didn't learn not to piss my money away. On all kinds of things. And trust me, I went to an all guys school. They didn't teach us anything about casinos or strip clubs. That would have been a good lesson. When you first turn old enough for that stupid stuff. But yeah, what they taught us was not of substance. That kind of stuff. I don't know why I just admit that I went to anyway. When I was a kid. Megan, appreciate it. Awesome. Let's see. Linda, can I get a pen? We could probably get you a pen. Linda, do me a favor. Well, if you're a client, you get a pen automatically. But Linda, I'm going to let you message me your address. I'm going to get you a pen. Megan, agree. Wonderful. What state am I located in? Okay, Shelly, the corporate headquarters is in Minneapolis, Minnesota, but we've got coaches all over. We got people all over. We've got our billing departments in Colorado. We've got people in Oregon, I'm going to forget some people. We got people in Florida. We got people in Chicago, Illinois. I know I'm missing folks. Idaho, I believe. No, Wyoming. I get really cute. You get up in like the upper left-hand corner of the U.S., and it's all like sparkly vampire territory for me. I don't understand it. All right. Let's see what else we got going on. Yeah, but we can work wherever, Shelly. So if you're local, or if you can get here, I invite you to come on in, sit down. We'll have a cup of coffee. We'll go through your credit together. I've got kind of a neat office with like you want to talk about something horrible like that. I can put your credit up in front of you, your score, on like a 48-inch television on my wall, and you can feel bad about it. But I'll try not to do that to you if that's something you want to do. But yeah, we're in Minnesota, Minneapolis, Minnesota, and we can work with you wherever you are. Kimberly says, love Credilife. I'm Oh, what? Wait. This looks good. God, thank you, Matt or Zuckerberg. I can't. You make pop-ups. Here we go. Love Credilife. I'm always trying to improve my score. I want 850. 850 is perfection. If you're a perfectionist, I say go for it. Repeat that YouTube name again. Okay, yeah. Here, in fact, we're gonna go one better. Um, so it's Credit TV on YouTube. CREDITV. Let me get you. Let me get you something. Let me get you this. Okay, Megan. Here is the YouTube link to Credit TV. That's the channel. All right. Bada bing. All right, let me scroll. Oh, I got scrolled back up to the top. Let's see what else we have going on. And if you guys have any questions, I'm here. Ask away. Oh, for sure, Megan. Linda, Penn, yep. Love the Credilife. That's so awesome. Okay, got Megan, I got you the YouTube channel there. Oh, you're welcome, you guys. If anyone has any other questions, throw them in the comments. I'll be around for a while. I'm going to launch a watch party after this. If you would like, I'm going to give, here's my shameless plug, okay? If you would like to have me as your coach, as your actual, I'm going to set up your program. I'm going to start it up. I'm going to make your game plan and be the one who helps retune it and fine tune it throughout the process for next level things. If you'd like that, I want you to go ahead. I want you to click on my link and I want you to schedule a consultation. There's no cost for the initial consultation. Like I said, it's just to see if you're a good fit for the program, if the program's a good fit for you. But I'll tell you what, I would be thrilled to talk to you on a day, an evening, a weekend. And what we will do is we talk. I mean, it's real. I'm not judgy. I'm so not judgy. It's. I hate the term like safe space. I really do. That I can get a whole different thing on that. But it is a good environment. You're not getting judged. I tell you what, there is nobody who's passionate about credit like we are that hasn't been through what you're going through. Okay, credit can be fixed. You have credit, therefore your credit can be fixed. Okay. I'm not going to judge you on past mistakes. Not going to judge you on things that happen. You don't have to feel scared. It's an uncomfortable conversation to have, and that's fine. Don't worry about it. I look at this clinically. Seriously, it's like, okay, here's the data. Let's deal with it. I don't care what happened to you. I mean, you care what happened to you in the past if bad things happen. But this isn't about that, man. We're looking forward. This is about your goals. This is about your future. This is about changing your life, having more money in your life. And as I always say, every time I do my job right, a kid gets a backyard to play in. And that's why I'm passionate about it. Okay. I got 7 kids myself. I'm a dad. I have 7 children. And every time I do my job right, a child gets a backyard to play in. And that's super powerful. So if you want that on your side, if you want that fighting for you, go ahead and click on that link and schedule up with me. I'd be happy to be your coach. Otherwise, my God, please stay in the group, stay active in the group and invite people who you think could use help, or maybe just that tip, or maybe, they don't even have to know why they're in the group. I mean, they don't have to know why. Again, it's not to embarrass them. They don't have to know why you invite them. It doesn't, it doesn't make it look weird. All of a sudden, they just start seeing some credit posts, and it's like, oh, this might be useful to me. So it's like we made it real low-key, real subtle for you and gentle. How much is it? Linda, there is an onboarding cost and there is a monthly component. Okay. Everything's billed in arrears, so it's billed after we've done work. The onboarding, it's $299 for an individual. It's $399 for a couple. A couple doesn't have to be married. It doesn't have to be husband and wife, or boyfriend, girlfriend, or girlfriend, girlfriend, or boyfriend, boyfriend, or husband, husband, or wife and wife. I think I got all the combos there. I'm not going into like all the alternative ones past that, because we'd be going for hours if you really tried to do all the combos. But it doesn't have to. It's whoever wants to sign up together. That onboarding payment can be split into half payments as long as it's done the first few weeks after you enroll. That's fine. And like, if you were to enroll today, I can't take the first payment today to get started today. I'm not even equipped to. Okay, I typically can't even touch a payment until at least 5 days down. There's a few reasons for that. Number one, the way we interpret our job, our role, and what we do as a credit service organization is a little old school. We do work before we get paid. Novel idea. I don't think people subscribe to that anymore. So it's everything's billed in arrears. It's absolutely work. Now there's a monthly component to it. It's $135 a month for as long as you stay in the program. Again, it's billed in arrears. It's $230 for a couple. If you are a military veteran, a public service employee, a military member, firefighter, things like that, you will get a discount. We can talk about that during your consult. But you don't have to come up with like the monthly and the onboarding at the same time, like a real life. Let me give you a real life example. I had someone enroll earlier today. They don't get paid till next Friday, so we're doing the first half of their thing next Friday. The second half 2 weeks later on the 28th for their onboarding, and their first monthly payment they picked March 20th for the first monthly for the 135. So that's how much it is, Linda, and I gave it to you in full detail. All right, I want to thank you all for tuning in tonight. I hope you take this seriously. I hope your takeaway is, hey, you're at a 580, super. Just because you can doesn't mean you should. Don't let someone pressure you. Don't let someone push you. Oh, but you're gonna miss the house. I'll tell you what, there's another damned house. There are more houses every day. Okay. Fall in love with one, you'll fall in love with another. I want you to know this. If you think you can't afford to fix your credit with me or on your own, I want you to understand you cannot afford not to. This is about long-term and the future for you. All right, I'm going to wrap it up. My name is Jeremy Deysach. I am the FICO certified credit coach that also has the American Institute of Banking consumer lending background, and I'm the founder of the Free Credit Repair Advice Group. Thank you all for tuning in. I'll talk to you all soon. Bye-bye.